Samfim. This is Shreya from Samaya. The topic we are going to brush up is company audit CA Inter. We'll see this company audit with respect to the section numbers, so it would be more helpful for us to learn topic wise. First, we'll go with section 141, eligibility, qualification, and disqualification of auditors. Auditors they are referring here is the statutory auditors, which were appointed under Companies Act. These eligibility, qualification, and disqualification with also regards with Companies Act 2013. First, we'll see the eligibility criteria. A person, why they have said a person is that that person is still not an auditor. So, any person will be eligible to be appointed as an auditor only if he is a chartered accountant. A firm shall be eligible if majority of its partners were practicing in India as chartered accountants. The firm, including LLP, when appointed as auditor, only partners whose CA shall be authorized to act on and sign on behalf of the firm. As we already know, right? Auditors could be either individual or as a firm. So if it's appointing, the company is appointing as an individual as an auditor, he shall be a chartered accountant. If it's appointing as a firm, then he need the majority of partners shall be practicing in India, whether they were lawyers or chartered accountants or architectures, whoever that be, they will be practicing in India, right? Whether it could be also doctors. And such firm, including LLP, when appointed as an auditor, only partners who are CAs shall be authorized to act and sign on behalf of the firm. With regards to the finalization audit of financial statements, what are the qualifications? Negative list. Negative list is that if at all any condition was that was given below was complied, then he'll be not eligible to be appointed as an auditor. We'll see what are all those conditions. A body corporate other than LLP. Okay. Is the partnership and body corporate? No. A body corporate is like an artificial person, or it has like company. A body corporate other than LLP, which has a separate legal existence. Yeah. So the firm cannot be a body corporate. It can be an LLP. Okay. Officer or employee of the company. The company cannot appoint its officer or employee as its auditor. Okay. The partner employee of an officer employee of that company. Okay, the company cannot appoint its officer or employee, plus the company cannot appoint partner or employee of its officer or employee. Okay. A person, relative or partner, who are these? Holding any security or interest in CSH, company, subsidiary, holding, associate, subsidiary of that holding. Indebted excess of 5 lakhs in such companies, and guarantee of security with respect to indebtedness in such companies excess of 1 lakh. Here the holding any shares or interest security, the auditor shall not hold even a single rupee of such share or security interest in such company, but a relative can hold up to 1 lakh of its face value. That is face value here, not the market price, the face value. If acquires more than 1 lakh, within 60 days, the corrective measure shall be taken by whom? Auditor. If that relative exceeds that 1 lakh face value limit, the corrective action shall be taken by the auditor within how many days? 60 days. Okay, now these were relating to indebtedness of excess of 5 lakhs in such companies, whether it would be person, relative or partner. Only the shares, with regard to shares, relative was given some threshold limit. I would say guarantee security with respect to indebtedness in such companies excess of 1 lakh. What are those companies? Company, subsidiaries, holding, associate or subsidiary of that holding. And who has direct or indirect business relationships cannot become a auditor. Except there were a few exceptions here, right? Like commercial transactions as per Chartered Accountants Act 1949 and commercial transactions in the ordinary course of business at arm's length price. So you could have an Airtel SIM and go as a statutory auditor, even as a auditor. You could have a LIC policy and you could be an LIC auditor. That's no ordinary course of business. And the next point is relative of director or KMP. Okay, the director or KMP of the company, those relatives cannot be appointed as a auditors. And the seventh point is a full-time employee elsewhere. That is, they are not telling it as employee of the company. Employee, some full-time employee somewhere else, not a freelancer or part-time job. Somewhere else is fully employed. He cannot practice here. Exceeded 20 companies threshold limit. Okay, what all the companies that could be counted in this 20 were all companies except OPC, small and private company whose paid up share capital is less than 100 CR. Less than 100 CR, not less than or equal to. If it's 100 CR, it is counted. If it is 99 CR, you need not count. 2 digits need not count. When there's 3 digits, you have to count in the 20 companies. Okay. When he was convicted by a court for fraud and 10 years had not elapsed from the date of conviction. And the last point here is directly or indirectly renders services under section 144 services. That was the auditor is providing section 144 services, whether directly or indirectly to the company. He is not eligible to be appointed as an auditor. Okay, what role such services were? It's not. It's more like services that help the company to function, mostly like accounting, bookkeeping services, internal audit services, design and implementation of any financial information system, fintech services, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services. That is like BPOs, payroll, management services, and any other kind of services that may be prescribed in future. Okay, how do you categorize this and remember in one go? Bookkeeping services and internal audit. That's simple. We could get that. Investment advisory, investment banking services. These two could go in one way. Here is design implementation of any financial information system, rendering outsourced financial services. These two could go in one way. Actuarial management services. Okay, that's it. Any other services? Bookkeeping, internal audit, investment advisory, investment banking, design implementation of financial information system, rendering outsourced financial services, actuarial management services, any other kind services. As simple as that. And with that, we are moving on to our second topic, appointment of auditors. Appointment of auditors under section 139, whether you're appointing first auditor or subsequent auditor. If it's a first auditor for a government company, we all know who has the authority. Auditor under PSU, C&AG. C&AG within 60 days from the date of registration of what company shall appoint the auditor. If in failure of C&AG, board of directors can appoint within 30 days after the expiry of such 60 days limit, and even the board have failed, then members in an AGM within 60 days may appoint the auditor. Okay, if it's an other, and he shall hold office till the conclusion of the first AGM. For the first auditor, his time period would be only 1 year. For the subsequent auditors, with a minimum period of 5 years. But for a government company, it's only 1 year. Okay, first auditor. Other than government company, who has the authority? Board of directors has authority to appoint the first auditor. Within how many days? Board always 30 days. From date of registration. Okay, in case of failure, members and AGM within 90 days. Why 60 days here? Why 90 days here? Here the number of members were less, because if in order to call any company or government company, more than 50% of its stake was owned by government, right? So the number of members would be less. So it's very easy to handle. So it's 60. Here you're telling it's a non-government company, there would be a wide range of members exist. So they have given an extra 30 days time in order to accumulate such services and gather. So 90 days, 30, 90. Till the hold of the first AGM. Okay, this is the first auditor provisions. 60, 30, 60, 30, 90. Subsequent auditor. For a government company, obviously C&AG within how many days? Within 180 days from the commencement of the year. What year? Financial year, not assessment year. Hold the office till the conclusion of the AGM. Okay. Other than government company appointed by members of AGM. Here no board comes into picture. It's C&AG and here it's members. Hold the office from first AGM till sixth AGM. AGM what? Start of an AGM or conclusion of AGM? Conclusion of AGM. Okay. With regard to certain conditions, these conditions were disqualifications we have talked earlier, etc. And what's the notes? The notes were given to auditor here were before appointment of written consent from auditor and a certificate that his appointment is in accordance with conditions as prescribed under section 141. 141 what? What we have read it here, right? Certificate shall consist of what they are seeking for. They are seeking for a written consent and a certificate. That certificate shall consist of what? Eligibility, proposed appointment as per act, and proposed appointment is as per limits. What limits? 20 company limits. 20 company limits. And any list of proceedings against auditor or firm or partners with regard to professional matters. Why this? They have conviction by court, etc. Right? Here where the judgment have already come, they are directly eligible. Here there were proceedings that were pending. Okay, so that's it. These were the notes that have to be given with regards to the auditor. But with regard to the company, what were few obligations with regard to appointment of auditors were? The company shall inform auditor with respect to his appointment and also file notice of such appointment with registrar within 15 days from which auditor is appointed. You see here what are all the documents that company submits to a registrar or something other. Usually it's 30 days, but only here it is 15 days. It's a special mention. Don't go with the flow in your examination, or you try to put a bit more effort to remember it as a 15 days, or else you might get forget or go with the flow of 30 days in long run. So the company shall inform auditor with respect to his appointment and also file notice of appointment with registrar within 15 days from which auditor is appointed. Okay, that's fine. 15 days they have to inform the auditor and submit the appointment or notice to registrar within 15 days. Retiring auditor, if retiring auditor is appointed, if he's not disqualified for reappointment, okay, no notice for unwillingness. He is not disqualified and he has no unwillingness, so he is willing to join, and no special resolution passed for not to reappoint. This is an action by company, this is an action by act, this is an action by auditor, action by company. A, action by company. B, action by such auditor. C, action by company. So as per act you should not be disqualified. As per the auditor, he should not express his unwillingness. As per company, he should not, the company shall not pass any special resolution for not to reappoint. Then the retiring auditor shall be appointed as the existing auditor. Existing auditor will be reappointed and shall continue. What's a casual vacancy? When there was a casual vacancy, how do you look at that term as a casual vacancy? When you have done something that was unusual, but you have done it with a no specific reason or a reason which was not special to mention. What would be that reasons would be any reason under resignation or removal or any kind which is not so serious to mention about, but there was had done that. So likewise, casual vacancy here, he had got vacated the office, the auditor had vacated the office. How? Then there was a casual vacancy that had happened in the company. With regards to government company, it has to fill by C&AG with a 30 days. And if in case of failure of board, 30 days. Okay. Here 30 days. For the first auditor, C&AG 60, Board of Directors 30. For subsequent auditor, C&AG 180 days. But in case of a casual vacancy, C&AG only 30 days. 30 days. Remember that. 60 first auditor, 180 subsequent auditor, 30 days in case of casual vacancy. Board of Directors everywhere 30 days. And in case of other companies, it has to be filled by the Board of Directors within 30 days. In case of any resignation, appointment of Board of Directors should be approved by the company in a general meeting. Okay. If casual vacancy had been occurred due to his resignation, auditor shall file ADT 3. Resignation ADT 3 indicating reasons. Auditor shall file ADT 3 indicating reasons if he had resigned from government company, registrar and C&AG. If it's other company, no need for C&AG, company and registrar enough. If he failed to file ADT 3, then penalty, general 50k or his remuneration, whichever is lower. If it's a continuing failure, 2 lakhs or 500 per day, whichever is whichever is lower. In case of the company wanted to remove the auditor, then casual vacancy has occurred. Okay, what all the provisions with regard to the removal of auditors? Auditor can be removed before expiry of his term by a special resolution. With what resolution? Special resolution after obtaining previous approval of central government. Special resolution, central government, in form ADT 2 plus fees. Within 30 days or special resolution, company shall hold AGM within 60 days from receipt of approval by CG. Form ADT 2 shall be filed within 30 days of such special resolution. Special resolution ADT 2 within 60 days from the approval of C&AG has to hold a AGM. So with regards to special resolution ADT 2, with regards to approval of C&AG, what do they have to? They have to hold AGM within 60 days. 30 days, 60 days. It's as easy to remember, and an opportunity of being heard has to be given to the auditor before such removal. That's a general point. If tribunal satisfied that the auditor involved in fraud, it may direct company to change its auditor. How tribunal knows that auditor involved in any fraud? Inquiry, inspection and investigation chapter in law. Company audit, where anybody, members who thought or any person can apply to tribunal or central government or company, apply to tribunal with regards to that, then in that case the tribunal knows that the auditor had involved in fraud and might direct the company to change its auditor. If application is made by central government, within 15 days of such application, tribunal has to make an order that the auditor shall not function and central government may appoint another auditor. Okay. Such auditor against whom final order has been passed and shall not be eligible to be appointed for 5 years from date of passing the order. After such final order was passed by the tribunal, auditor cooling period how much? 5 years from date of passing order, and auditor shall be liable under section 447. Okay. Appointment of auditor other than retiring auditor. A special notice for resolution at AGM. Okay. Appointment of auditor other than retiring auditor, or expressing that retiring auditor shall not be reappointed. Here this don't get confused with special notice and special resolution. Here if no special resolution is passed for not to reappoint, here a special notice has been given for the resolution at AGM with regard to what? Appointment of auditor other than retiring auditor, and expressing that retiring auditor shall not be reappointed. Okay. On receipt of notice, company shall send notice to retiring auditor. Okay. When the auditor, after notice is given, gives his representation in writing to company and requests to notify to members of the company. Okay, auditor is giving his representation in writing, and company in any notice. That need not be a special notice. Special notice only for only for mentioning the resolution to appoint other than retiring auditor, or expressing retiring auditor shall not be appointed. And the company in any notice of resolution state the fact of representation and send a copy of representation. If not sent, auditor may read out at the meeting. Due to time constraints, anything could be okay. Whether he could read out, or company may send a copy of such representation of the auditor. If tribunal is satisfied that such representation is being abused by the auditor, that is, he's keep on nagging about the company and complaining about the management or company, or defaming the company, then such which was not true, actually, which was not true, is just his opinion, which were not facts, then the representation need not be sent nor read out at meeting. Here the company could either send a copy of representation, or auditor may read out. But if auditor is abusing his right of representation, that need not be sent nor read out at meeting. Okay. The next topic we are going to move is rotation of auditors. Rotation of auditors were not mandatory for all companies, but few classes of companies, including listed companies, but excluding OPC and small companies. What were those? Such class of companies were unlisted public companies having paid up share capital more than or equal to 10 CR. If it's 10 CR minimum, rotation is applicable. It's a private limited company having paid up share capital more than or equal to 50 CR, that is minimum 50 CR paid up share capital applicable. Unlisted public companies, minimum 10 CR. But for listed, if it's listed, that's enough. Rotation is applicable. If it's a private limited companies, minimum 50 CR or paid up share capital. And all companies having paid up share capital of below threshold limit, but having public borrowings from financial institutions were more than or equal to 50 CR. That is, more than or equal to minimum of 50 CR borrowings were there from any public financial institutions. Such companies were also eligible for rotation of auditors. As per section 139(2), above companies shall not appoint or reappoint an auditor, individual more than one term of 5 years, a firm more than 2 terms of 5 consecutive years. That is, the 2 terms of 5 years shall be consecutive. We are discussing about the manner in which auditors rotate as per Rule 6 of CAR 2014, where first the audit committee shall recommend to board that what do it recommend? It recommends the proposed auditor who shall replace the existing, and the company is required to constitute an audit committee if at all a company, after meeting a specific threshold limits, if it has to appoint a constitute an audit committee, then board shall consider the recommendations of the audit committee. You may get various questions with regard to board has discretion and etc. and all. No, board shall consider recommendation of audit committee, and if at all the board disagrees, it has to give reasons, and audit committee shall reconsider that, or board may give its suggestions. It could be as that, but not at the discretion of board. The board recommend for appointment of next auditor by members in AGM. After board has agreed to that, it could get approval in AGM. The incoming auditor shall not be eligible if under the same network of audit firm as that of the outgoing auditor. Okay, it is mostly similar to this, right? Having common partner with that of previous audit firm to the proposed likewise. And what are all the threshold limits to form an audit committee? Were public companies, all public companies. For the rotation, there also includes a private company and all which has more than 50 CR paid up share capital and 50 CR borrowings. Here only public company having paid up share capital minimum 10 CR, that is more than or equal to 10 CR, and having turnover or more than or equal to 100 CR, having borrowings more than 50 CR. Here more than 50 CR, more than equal to 100 CR, more than equal to 10 CR. It could be any of the, or if it satisfies paid up share capital and doesn't satisfy these two, then audit committee shall be constituted. And as per rule 3 of CIR, the manner and procedure of selection and appointment of auditors. Here we have seen that the audit committee shall recommend to the board and board shall then send it to the AGM, etc. Right? The manner was here under rule 3. If company has audit committee, then the committee, if not board, shall take into consideration the qualifications, experience of individual and also size of the firm proposed. Moreover, any order or pending proceeds relating to professional matters against such proposed auditor before ICI or court. Okay, what do they have to do? Audit committee shall consider what? Qualifications and experience, any kind of proceedings that were against professional matters against ICI and court. The audit committee may call for such other information which it's deemed fit. And audit committee recommend to board. Board will go and recommend it to AGM. If a company which need not require to constitute an audit committee, board shall recommend to shareholders in an AGM. And the such recommendations of audit committee, board may agree or disagree. Disagree, refer it back citing reasons. Audit committee, after considering board's reasons for such refusal, decides not to reconsider them. Then board shall record such reason for disagreement and send its own recommendation in AGM. And auditor appointed in first AGM shall continue till conclusion of 6th AGM. Conclusion of 6th AGM. Remuneration of first auditor, board of directors, remuneration of subsequent auditors fixed in AGM. Remuneration includes expenses or any other such facilities provided by him. And what are the powers of auditors, duties of auditor, and we'll see this. He has right to access what the auditor had come for. He had come to audit the financial statements, books of accounts, and to whom he has to report. He has to report it to the shareholders, members. So he has right to receive notice for the annual general meeting. It has right to attend such, and he has right to give report. The board shall not prohibit him from giving report. And we'll see. Right to access books, right to obtain information or such any other explanation from officers, like written like external confirmations or any other kind of written representation from TCWG or management, and right to receive notices and attend the general meeting. Okay, right to report to its members of company on accounts examined by him. Okay, these were all we have discussed. Right to access books, information, notice, and has right to report. He has also has right to lien on books of whom? Books of company, that is client, placed in his possession for non-payment of dues. When he could access lien, when non-payment of dues were there and books were at his possession. Okay, what are the duties of auditors? What he have come for? He have come to audit the financial statements and give an audit report. That's it, right? The same thing would be here, to inquire certain matters. Okay, he has inquired certain matters with regards to what standards of accounting or act, etc. Duty to report, sign, and when he issues any qualified report, he has to cite also reason. Report on frauds, and have to state reasons for qualified or negative report or comply with auditing standards. And what are the members can qualify, what are the reasons for which members can also qualify the audit report? If accounting policies were not disclosed under Schedule 3 of Companies Act, and the accounts were not prepared under accrual basis, going concern was not followed, and proper disclosures regarding change in accounting policies were not made. This isn't an important question, but it might be asked in a direct question or a direct question. So just go through it once and just revise it before the examination. That's it. There is nothing much more. Going concern, the accounting policies disclosure and change of such accounting policies disclosure, and accounts were not prepared under accrual basis, not such an important point. Now we are dealing with joint audit, then later on we'll go with branch audit and then cost audit, and that's it. What is joint audit? Joint audit is nothing but two or more audit firms have come together to perform an audit of a single large client. A joint audit means a pooling together resources and expertise for more than one firm to render an expert job which may be difficult to be accomplished by acting individually. Okay. What are the advantages of joint work? So that they could share the work and share the experience, and they could easily go on with that, like sharing expertise, sharing the workload, and improved service to the client, so that they could have a so that they could improve their service to client and lower staff development costs. So the staff training would be, if we are a firm that was mostly concentrated on such ROC compliances or such, and another firm is in expertise in such other, we need not invest so much amount in our staff in learning that, because there was other firm that was already handling such, and healthier competition and for better performance. And what would be the disadvantage? Disadvantages, when you think of disadvantages in a joint audit, you go mostly with the behavioral concepts, behavioral consequences, as we see mostly in our SEMPE case studies, right? Where because of superiority complex of the auditors and problems with coordination of work, and where the common work is being neglected and fees being shared. Okay. When a joint auditor comes across a matter which is also responsibility of other auditor, requires special attention, disclosure or discussion or judgment that is said, auditor shall communicate to those auditors in writing prior to completion of audit. That is common area work, where they were saying that a particular thing requires the attention of other joint auditor, then he shall communicate to that auditor in writing prior to completion of that audit, so that they could give their opinion on that matter. Joint auditor required to issue common audit report. Though they were two audit firms, they have to issue only one audit report, but they have difference in opinions. They could issue two different audit reports, but they have to make reference to this another audit report that was also there by the other joint auditor. And what is the audit of branch accounts? As per section 128, every company shall prepare and keep its register office books of accounts every financial year, which give true and fair view, including its branch office, that shall be kept in accrual basis and double entry system. Whether that branch would be within India or outside India, it shall prepare and keep it in register office. Such books of accounts, which were prepared as per accrual basis and double entry system. Books of accounts may be kept at a place where board of directors may decide and where such decision is taken, but it shall within 7 days file with registrar writing full address of such other place. That is, when they were placing their books of accounts other than the registered office, within 7 days they have to communicate with the registrar with such other place. If branch office is situated outside India, the account shall be audited either by company's auditor or accountant or a person duly qualified as auditor in that other country. Okay. Branch auditor shall prepare a report on branch accounts examined by him and send it to the auditor, including fraud. Now we are going with cost audit. Cost audit is an audit process verifying what? Cost of manufacture of any article with regard to utilization of its material, labor and other costs. Maintaining cost records in form CRA1. After a specific threshold limit, that is turnover is minimum 35 CR, that is for all products or services it was had, including foreign companies, excluding MSME Okay. And cost audit, if it's a regulated sector or non-regulated sector, when its overall turnover is more than or equal to 50 CR, if it's a non-regulated sector, more than or equal to 100 CR. If it's a plus individual turnover, that is single product or single service, where more than or equal to 25 CR, here more than equal to 35 CR. Take a minute and try to get these numbers into your head so that it could get in an MCQ. If you want to maintain cost record, if you want to maintain cost records voluntarily, you could maintain, but what this the threshold limit that was given was minimum of 35 CR of all turnover, overall turnover, minimum 35 CR. If you have crossed that, if 35 mark was set, 35 CR mark was set, you have to maintain cost records. Cost audit, when overall, if you are from a regulated sector, overall turnover cross the mark of 50 CR or have touched the mark of 50 CR has to maintain, or if your individual turnover from a single product touch the turnover of 25 CR, you have to get your cost audit done. And likewise, non-regulated sectors, overall turnover if had touched 100 CR, individual turnover touched 35 CR, has to do cost audit. Cost audit shall be appointed by auditor, shall be appointed by board of directors, with such remuneration decided by them, and no person appointed under 139 shall be appointed for conducting audit of cost records. 139, who? The statutory auditors. Now we'll see the appointment procedures with regard to cost auditor. A cost auditor shall be appointed within 180 days or from the commencement of financial year. Have you seen such like time limit? Government auditor, CNDG appointment 180 days, subsequent auditor 180 days from commencement of financial year, subsequent auditor for a government company. The written consent and certificate shall be appointed from cost auditor, like same notes to the auditors which we have seen in appointment of statutory auditors. That certificate shall certify individual or firm is eligible for appointment under Companies Act, CW Act, and satisfy criteria under section 141. 141 what? Eligibilities, qualifications we have seen in starting of this PDF, right? And proposed appointment is within limits under the Act. That is 20 appointments, 20 companies, and the list of proceedings pending with respect to professional matters are true and correct. So this is like mostly repeated stuff where the appointment has to be done within 180 days from the commencement year, and had obtained a written consent and certificate, and what they have to do, that is their appointment as per Act, and they has qualified for eligibility criteria under section 141, and proposed appointment is within limits, and they were having all the list of proceedings were mentioned in that report. Certificate was true and correct. Every company shall inform cost auditor's appointment in form CRA 2 within 30 days of board meeting in which appointment made, or 180 days from the commencement of financial year. Likewise, in statutory auditors, what do we have seen here? 15 days, right? 15 days it has to give intimation to registrar. But here, within 30 days, it has to inform CRA 2, board 30 days of board meeting, or 180 days of commencement of financial year shall file form CRA 2. Cost auditor shall continue till expiry of 180 days from closure of financial year till he submits cost audit report, which I have raised earlier. Okay. So this is his term till expiry of 180 days from the closure of financial year or till he submits his cost audit report. And what's the removal provisions? Removal before his term through a board resolution after giving a reasonable opportunity of being heard. Casual vacancy due to any resignation, death, or removal shall be filled by board of director within 30 days. The CNDG 30 days, board of directors 30 days, same time limit. And shall inform CG within 30 days, inform CRA 2. Even for the appointment with regards to normal appointment or with regards to casual vacancy, same form CRA 2. With regards to remuneration, The companies which has audit committee, what do they do? Board shall appoint cost auditor report on recommendations of audit committee. Audit committee shall recommend what audit committee do? It shall recommend cost auditor and its remuneration. What do shareholders do? They subsequently ratify. Audit committee, board of directors, and shareholders at AGM. Companies which have no audit committee, board, what do? They appoint the cost audit report and fix the remuneration. Shareholders subsequently ratify. And submission of cost audit report. The cost audit report shall be submitted in form CRA 3, CRA 2 appointment, CRA 3 or cost audit report within 180 days. Cost audit report, anything that relates to cost audit, it goes with 180 days from closure of financial year to board of directors. To whom? Board of directors. Company within 30 days from receipt of a copy of cost audit report sent to central government in form CRA 4 XBRL. Form CRA 4 XBRL, that is cost auditor to board of directors in form CRA 3. Company within 30 days from a receipt of CRA 3 shall submit to registrar, that is central government, in form CRA 4 XBRL. Cost audit rules are not applicable when revenue from exports in forex is more than 75% of total revenue, and operating in SEZ, or it was engaged in generation of electricity through captive generating plant. When cost audit rules were not applicable, when its exports in forex is more than 75%, or it's operating in SEZ, or it's engaged in generation of electricity. Section 147, punishments for such non-compliance. Contravene 139 to 146, minimum 25k to 5L for the company and minimum 10k to 1L every officer in default. Or contravene for 139, 144, 145, minimum 25k to 5L or 4x the remuneration, whichever is lower. Auditor willful contravention to deceive company, 1 year imprisonment, 50k to 25L or 8x of remuneration, whichever is lower. All these penalties, remembering all such penalties could create a frustration within you. So try not to remember. I think we'll come up in future with easy way to remember penalties within 2 weeks or so. Please bear with us for such late. We'll try to figure out. Finally, our goal is to give 100% in examination, right? We'll figure out such way to find such penalties, and regarding all time limits, etc. We'll find a chart so that just 1 hour before the examination, you could refer that 2 to 3 pages of that, and you could go with the exam and do your MCQs well. And auditor convicted shall be liable to refund remuneration to company, pay damages to company, statutory bodies or creditors. Okay, they're saying that if auditor got convicted, they have to refund the remuneration and pay such damages. Central government may appoint any officer for prompt payment of such damages and required to file a report. When audit is conducted by an audit firm, the partners are all jointly and severally liable, but in case of a criminal liability, only the concerned partner who acted in fraudulent manner is liable. Okay, that's it for the company's audit now, and please do the question bank. And we have also released the test series, and if at all interested or to test their test their preparation or test their concepts, could come and write the test series and get it self-evaluated or get evaluated by us. That's your wish. That's as per you. And have a great learning and try to retrieve as much as possible. And see you soon. Yeah, we'll try to post videos frequently so that it would aid your preparation. Due to some technical and health issues also, we have been going on a very slow phase, and hope we'll come back strong.